Last April, did you have to pay into taxes a very large amount that you didn't expect? Today we're going to find out why that might be and then how to fix it going forward. So let's go ahead and dive in. So the first step that we want to do is we want to take a look and pull up your actual tax return. There's typically a 2-year comparison, usually in that either that second to fifth page or so on your federal tax return. And I'm just going to show on the federal side, but this would still apply for any state that you live in as well. So let's take a look here at an example, and your 2-year comparison is going to look a little bit different. But what you're going to look at is you're going to take a look at see what the differences are. So for example, I might have got a new job, and then my wife stayed in the previous job that she's always been in, and we got some raises. So you can start to see some of that income increase. That's maybe one of the reasons why higher income tax owed. And then you go down a list. Well, $400 here and there, that's probably not going to make that big of a difference. And then if you keep scrolling down, one of the things you'll see if you don't itemize your deductions, you'll see that your standard deduction does increase with inflation each year. So that has been slowing down the pace of increases as inflation is coming down. But again, not going to be too big of a difference. So let's keep scrolling. Let's see what's going on here. Aha, right here. So this is typically why when I hear about a new client coming on saying, I owed so much on taxes, let's figure out why. It's typically because of a job change or a payroll service change for their current employer, and it messed up their tax withholding. So you can see here, if you scroll down a little bit further, their tax bracket, their tax rate really didn't change. What did change was how much their payroll provider was withholding. It's not necessarily their fault. They don't know your financial situation. And so either if you're going to do it by yourself, you'll have to figure out those changes overall. Or if you're working with a tax advisor, during the year, let them know that you switched jobs, and maybe give him or her a copy of your pay stub to project out how the rest of the year is going to look, so there's no big surprises. So now let's go ahead and take a look at, well, how do we fix this? And so particularly if you're in the middle of the year, it's a little bit tougher than if you're in the beginning of the year. And so if you're here in the fall, it's going to be a lot tougher. So let's take a look at the tax withholding on your paycheck. So here I pulled up 2 examples of paychecks that I just found online. And let's start with the left one. This one's a little bit more detailed, and let's zoom in here. So in this example, we have $17,000 of earnings year to date. And then as far as our tax withholding, let's take a look. So year to date, $3,300 and change. That's equivalent to about a 19% tax withholding for the federal. Now, if you go back to your 2-year summary, your effective tax rate is 12. Your marginal is 22. So any additional income is going to be taxed at 22%. But if you take a look at all the income that you earned through the years, or for the rest of the year, you'll see that you paid 12%. And so if you're withholding 19, then there's another issue, and it's probably on the spouse's side. If you're lower than your effective tax rate, then it's probably your payroll service that we want to adjust. So let's take a look here on the right. So on this one's a lot more basic, but let's scroll in here. So if you have $600 of year-to-date income, and you take a look here, year-to-date, $35.81, that's equivalent to just a little bit under 6% tax withholding. So bam, we found the culprit. So how do we fix it? We fix it by going to our payroll provider. So if it's ADP, Paychecks, any form of HR service that you have, when you set up your payroll, your tax withholding, or your benefits, typically it's somewhere in there. What we want to look for is what's called a W-4 form. Now this form can be pretty complex, and you can do it 2 ways, one of 2 ways. One is you can go line by line, sharing how many dependents you have, if you're married, filing jointly, the income that they typically earn, and that payroll provider is going to do essentially its best guess as far as how much it's going to withhold for you. The other way to do it is just to start adding a specific dollar amount to withhold for your pay stub. Now again, this is going to be a little bit trickier, but I'm just going to use an example. If we are in, let's say June 30th, right at the halfway mark for the year, and we expect that our income situation is going to be very similar, and the total dollar amount that we're going to be taxed is going to be very similar from last year. But last year we owed $5,000. What you'll have to do is you have to take that $5,000 and divide it by the remaining amount of paychecks left. So if you get paid on the 15th and the end of the month, you have 24 pay periods. If you get paychecks every 2 weeks, and a good reminder, sometimes if you get a paycheck like 3 times in a month, that means you're on the 26-week pay plan. So let's say we're in mid-year and we owe $5,000 last year. Well, if we want to try to knock out the whole amount, what we're going to have to do is take $5,000 divided by 12, because there's 12 paychecks left, or 13 if you're on that bi-weekly pay schedule. We take that $5,000 divided by 12 paychecks left, that's $417 additional that needs to be withheld from your pay stub. And so you go here on the form, and if it's an HR system, it's going to look a little bit different, but the one we're looking for is right here, this extra withholding. And so it's step 4C. This is the simpler way versus plugging in all the other income sources and how you file your taxes. If you just go to extra withholding, you want to put in that $417. And what that'll do is, between now and year end, target that withholding of that $5,000. But if you do that, especially if it's late in the year and it's a big chunk of your paycheck, really make sure to write yourself on a note or an alarm or something at the beginning of next year, and take that $5,000 divided by 24. You're talking like $210 per paycheck, so it should be a lot more manageable if you catch it at the beginning of the year versus the middle of the year. That's one of the main reasons why we find clients that come to Petros Family Tax and they owe a big chunk of money is typically because their payroll system isn't really catching some of the spouse's income or other investment income that they might have. And so one of the simplest ways is to adjust the withholding and do it on a per paycheck basis. So I hope you found that helpful. If you did, please go ahead and like, subscribe, and hit that notification button. Thank you.